Joining us right now is Brian Brooks. Of course, he is the U.S. CEO over at Binance. And of course, he has a long career in the banking and finance industry, including over at Coinbase, at Fannie Mae. Most recently, of course, he also served as acting comptroller of the currency. Brian, thanks for being with us today. Obviously, we had a very sort of, I guess, planned out agenda of what we were going to talk about. But we have to get right to the news of the moment here, Brian. And I want to get your thoughts here on some of the moves that we've been seeing in the cryptocurrency space today, and specifically about the volatility surrounding that. Your platform has had some issues, or at least has been reported here by Bloomberg and other folks here. Where does your platform stand right now with regards to allowing people to transact?
Well, so first of all, Romain, thanks so much for having me. This is definitely a different day than any of us were hoping for a week ago. But what I would tell you is there's great news, and then there's sort of hopeful news on the Binance US platform. The great news is that the platform is amazingly resilient. We transacted almost $3.3 billion on our spot exchange in the last 24 hours, which I think is an all-time record for the exchange, and it's held up very well at a time of rapid transaction. The issue we have, quite frankly, is that we have way too many customer support issues on backlog. And I want everybody in the Binance US community to know we are all over this. I mean, we have 3 or 4 major initiatives that are going to fix that in the coming weeks and months. One of them, Romain, is we hired one of the most noted leaders of customer experience in the technology industry, a person who took Comcast from one of the worst customer experiences in America to having one of the highest net promoter scores of in America. She's joined Binance US to fix this. We've got a self-service kiosk coming online very shortly that's going to allow people to solve their own problems for the 5 or 6 most common reasons that they're sort of having a hard time onboarding. And we're migrating RiskLogic from an international platform to a US-based platform so we can control the kinds of risk changes right here in the US that are causing some people to have access issues. So I know it's a big deal. I've got that feedback, but we're all over it, and you're going to see a different customer experience very shortly.
All right, it's certainly a big deal. And one of the reasons why we have you on, one of the reasons why we're having this conference is because over the past year, really the past couple of years, we've seen this migration to, I guess, what once were alternative assets that to a certain extent have now become mainstream assets. But being part of the mainstream also means that there needs to be some degree of stability, or at least some degree of predictability, at least on a relative basis. Does cryptocurrency actually have that?
Yeah, Romain, it's funny. I was looking before this interview at the chart of how the Dow Jones is performing today. And the Dow Jones is in a straight line, sort of, I don't want to say it's in a free fall, but it is a straight line down over the last 24 hours. And somehow nobody's reporting that story. Same thing with the US dollar, which has been debased to the tune of about 40% over the last year. That's why you're seeing historically insane inflation levels. But nobody's writing that story either. They write about crypto because it's new, and they assume that the status quo is kind of the risk-free zone. It really isn't. Markets are going down right now because there's a lot of strange things going on in the world globally, in the world of U.S. domestic policy, and crypto is one of the victims of that. But it's not the only. It's not the only. I mean, volatility is inherent in investment markets. We're going to see it here too.
Absolutely. Absolutely. But the volatility that we see in the Dow, the dollar, and some other assets, typically the drawdowns that we see there tend to be, I guess, a little bit more restrained here. When you have 30% drawdowns in a single day here on an asset, I don't know if that's fair to make a comparison to some of the drawdowns that we've seen in the dollar or in equity markets.
Yeah, it sort of depends on what your risk tolerance is. I mean, if you're a retiree living on a savings account, I think the decline in some of those other assets are just as big a deal as part of your day to day as they are for crypto investors. But at the same time, Romain, we have to ask ourselves, why is this going on in crypto? And the answer is sort of severalfold. I mean, one is there's a fair amount of misinformation going on in these markets. So, from Elon Musk tweeting to misinterpretations of what China actually said yesterday, those things get filtered in a very weird way. And even more important in this country, we haven't yet built a two-sided crypto market yet, the way that we have in every other traditional asset class. In the United States,
what do you mean by two-sided?
So what I mean is you can basically only be long crypto in this country. You can buy Bitcoin or you can sell Bitcoin. What you can't do is engage in Bitcoin futures, derivatives, swaps. These are things that bring price discovery and stability over time. And we need to get regulators comfortable that those kinds of things are positive, not a negative in this asset class, which I think we'll get to eventually.
There are probably a lot of people nodding their head at the comment that you just made. And for every person that's nodding their head, there are probably just as many people shaking their head and saying they don't want that regulatory scrutiny. They don't want that regulatory involvement. What's your response to that?
Yeah, look, I mean, what I tried to do in my last job in the government running the banking system was to say we're not fans or enemies of crypto, but we do believe that markets need clarity. And so, I'm not saying that more scrutiny or less scrutiny is a good thing, but having a set of rules would be great. I mean, imagine roads with no speed limits, right? I mean, nobody knows if you should drive fast or slow, and so it's super dangerous. And then you have a speed limit, and everybody knows what the rules are, and they can then adjust their behavior. We need that in crypto pretty urgently.
But isn't hasn't the lack of rules in crypto, hasn't that been for a lot of people the attraction?
I don't know that that's right, to be honest. I think the attraction of crypto is more about decentralization and less about lawlessness. That's again part of our reputational challenge. For me, what
Right.
we're building here is a financial system away from central gatekeepers. That's really what it's all about. We're building the internet. People who think what we're trying to do is build secret magic internet money that can't be surveilled, those guys are probably in the wrong line of work. It's that we're building
Right.
decentralized financial systems that bankers don't control. That's got to be a positive.
Okay, well, let's kind of conceptualize that then, because the decentralized nature of this is obviously a big part of the appeal here. But the stability, at least when you look at other markets, the stability is often centralized in a way, or at least what brings stability is that centralization. I mean, we once had a decentralized economy here until somebody decided that we needed to create a Fed and have some sort of stability built into the Fed's mandate here. If you get to a stage here where you want a system of rules, a system of speed limits, if you will, isn't that in and of itself almost a centralization? How do you do that without re-centralizing things?
Yeah, I guess. Look, there are a couple of problems with that analysis. I mean, the first is we didn't create the Fed, in the 19 teens because decentralization was bad. We created the Fed because we didn't have a technological ability to allow people to transact directly with each other, and so somebody needed to issue the dollars that could be accepted everywhere. But we now have technology that does that. It's sort of like, the reason that the post office was the way we transacted information in the olden days was because there was no way for somebody in New York to talk to somebody in San Francisco. And then we had email, and we didn't need the post office the same way that we used to, right? So technologies sometimes supplant the assumptions on which institutions were built. So where you say stability, Romaine, I would say brittleness. Yes, it was stable. It was also super controlled, right? It was also incredibly expensive and didn't work all that well. It was merely the best thing we have. Now we have something better.
If we get to a stage where we see more rules, who should have the oversight?
Well, my personal view is it depends on the utility that we're talking about. So remember, every cryptocurrency represents a different function, right? These are all different networks being built for different things. So, if you're talking about Bitcoin, which fundamentally is an investment asset, it's kind of digital gold, we like to say, it ought to be regulated if it's regulated. Like investment assets are regulated. It's not a security, of course, but it's something that people buy and hold for its value retention properties versus Ethereum is a network for the remission of payments, right? Or for crowdsourcing of funding. And so if it's like a payment mechanism, you'd expect the banking regulators to talk about that, which is what I did at the OCC. So it all depends on what the underlying activity is. Like activities should be regulated alike. They shouldn't be regulated by asset class category. If this is a payment mechanism, it ought to be regulated like a payment mechanism, et cetera. And I think that's the mind shift that regulators need to achieve here.
You spent a brief time as a regulator here. Do you think that regulators and, more importantly, some of the legislators in Washington understand those distinctions?
Well, I think that they do more than they used to. So, I entered crypto about 4 years ago in sort of a big way. And at the time, the knowledge base on crypto on Capitol Hill was very, very shallow. There were maybe two or three members of Congress who really had started to explore it. But at this point, we've had multiple United States senators and multiple members of the House of Representatives who really get it. And I'm talking about people on both sides of the aisle. That's the interesting thing about crypto is it's a weirdly nonpartisan issue. People who go down the rabbit hole and get the network effect of crypto really are long this, and that includes people on both sides. So I think we have a lot more of that. I think at the senior regulatory level, there are people who've just never used it. It's possible it's because they're at an age where we're comfortable enough with the status quo that exploring new tech is not a thing. But we need to, we really do, because if we lose this race to other countries, if we lose control over the next internet, that's going to be bad for generations to come.
Well, part of what's going to drive the debate, that certainly in Washington, is going to be, I guess, how people sort of view the case for crypto. Is it just a speculative asset? Is it a store of value similar to gold? Or is there a use case for it as a transactional means here? What's the argument that you make?
Yeah, well, look, first of all, let me just say that the token focused approach to this conversation, I always say, is the wrong approach. So forget about the crypto tokens for a minute. Think about the networks that are the reason the crypto tokens exist. That's all tokens are about, okay, is to induce people to participate in networks. So forget about whether, Tezos or Filecoin or Uniswap are going to be more valuable tomorrow or less valuable tomorrow. The question is, do you have a thesis for the underlying thing that they're powering? So think about it this way. You don't buy Apple stock because you think that the stock is going up or down. You buy Apple stock because you think that iPhones are going to win in the market. And if they win in the market, then by definition, your stock is going to go up in value. Same thing here. If you think Ethereum is the best platform to build financial services apps, then ETH tokens are going to go up in value. Stop thinking about the sort of the technical analysis of the shape of the price movements and start focusing on the network that's being built. The networks that win will have very valuable tokens, and it's more like that than it is about the tokens themselves. So that's why at the OCC, we really focused on the idea that some of these networks are payment networks. They're being used by companies to transact value from person A to person B. So they should be regulated like SWIFT and the automated clearinghouse, right? It's very easy to understand that. Yeah. Versus other things like Filecoin, it's a decentralized storage device. It should be regulated like the cloud. Once you think about it like that, it's a very different discussion.
Are there regulations already out there that maybe the crypto space can sort of be, I guess, slid under rather than creating something completely new? Just real quickly here, Brian, I mean, there's a question from the audience basically on this point here about what incentives can regulation add compared to what we have now or what we don't have now?
Well, so that's a fantastic question, especially for right now. Okay, so one of the reasons that Bitcoin is down the last couple of days is because of people's interpretation of the Chinese government's being believed to have said we're basically banning crypto. So you could get a lot of clarity and price stability by just knowing that the U.S. government wasn't going to ban crypto. And this was a point that I made when I was still in government, was to say nobody's going to ban Bitcoin. All right, there's a $2 trillion asset class in crypto that's not going to go away. So let's start by saying it's okay to be in the asset class. And then what somebody needs to say is, if a crypto token is a security, for instance, that doesn't mean it's illegal. It just means that, like other securities, there are certain disclosures and registrations that have to be made. And we need the SEC to create a pathway for that to happen. And if you think about the Ripple litigation, Romain, people wouldn't be in a panic about it if, in the event Ripple lost, they could simply register the token and trade on a securities exchange. The problem is that hasn't been allowed yet.
To your point, though, about the idea that it won't be banned, I mean, that's a fantastic point. There is concern here that China may not ban it, but it may compete with it. The U.S. may not ban it, but it may tax it into oblivion. Was there a concern there?
Yeah, I mean, look, I think there's always a concern. But again, that's not just about crypto. So when you think about taxing things into oblivion, we have an administration right now that's talking about imposing a capital gains tax higher than the income tax. That will kill the stock market. And yet again, nobody's asking if equities are going to go the way of the dodo, right? We have high tax periods of country and low tax periods. Asset classes survive. Americans are highly ingenious at finding ways of creating value, and that'll happen with crypto too.
All right, another question here from the audience for you, Brian, and this has to do with how you value or how someone would go about valuing crypto, and the idea of sort of what is sort of the main indicator of inherent value in cryptocurrency other than just, I guess, hopes and dreams?
Yeah, well, so let me just begin by saying what I'm about to say isn't financial advice. I'm not advising anybody to buy or sell anything. Sure. But having said that, I have a certain thesis for certain kinds of cryptocurrencies. I really believe that I'm a banker by background, and I believe that decentralized finance is the future of financial services. So if you believe that, if you in the future, people are going to get a better interest rate at, let's say, BlockFi than they're getting at JP Morgan, then the BlockFi token is going to be highly valuable, or the Uniswap token, or the Maker token, if you think about that. If you believe that online payments are a major innovation in the world, then you're going to believe that the USDC token is a great place to transact, or that the Solana blockchain, which allows you to transact instantaneously, is a highly valuable network. So again, it's not about guessing and speculating. You don't do that in your stock portfolio. You buy companies that are building products you know and believe in. It should be the same thing with cryptocurrencies. You have to understand the underlying network being built and have a thesis for why that network is more valuable than another one. If you can't articulate that, you're probably in the wrong asset class.
All right, you certainly understand finance and you understand regulation here. I mean, you spent some time at the OCC, the Office of the Comptroller of the Currency, here in the United States. Here, you were involved in writing some of the potential rules, proposed rules out there that would apply to this crypto space. As we speak right now, your successor is on Capitol Hill at a hearing, basically saying that some of these rules maybe need to be rethought here. When we talk about the regulatory process here and how the regulations sort of get made here, is there sort of a process where you are confident that what ultimately comes out on the other side is actually going to be beneficial to the end investor, not necessarily just to Binance or just to some of the crypto platforms, but to the actual investor, the end user here?
Oh, for sure. I mean, look. First of all, to your point about the testimony that my successor is giving right now, I think he made a lot of good points in his written testimony that I agree with, having to do with, look, we need to make sure that all stakeholders understand what's going on here. That's the very reason I kicked off a dialogue about crypto, because I think more than the other regulators at the time understood the magnitude of crypto and how many people were participating and how big the market was. By the end of my tenure, we had all of the financial regulators coming together around a statement on stablecoins. That had never happened before. And I think having a broader interagency dialogue about the role crypto plays in the economy is a great thing. I really like his statement in his written testimony that these kinds of network changes and fintech growth generally is inevitable, I think was his word, can't be stopped. And I think that's exactly right. So different political parties will address it differently, but I think all of that is good. To your question about how do we know that this is benefiting the end user, it's going to benefit the end user in the same way that original internet apps benefited the end user. So think about it. In the first internet crash, people decided that barbecue.com and pets.com just weren't any better than going to the mall. But they also decided that Amazon was way better than going to the mall. And that's where the value got created. It's exactly the same thing in crypto. Some of these apps, some of these tokens are going to be world beaters, and some of them are going to go to zero, just like happens in the stock market. So we need to get away from the bias against crypto and understand this is the new way value is going to be created in a networked future.
All right, you're relatively new in your job as head of the Binance US here. With regards to the regulation that could be coming down the pipe here, how structured is your business, is Binance US's business right now, to actually adapt to any of the regulations coming down the pipe?
Well, look,
Are
I
you
mean,
prepared?
we're always going to comply with whatever the regulations are at a given moment. So just keep in mind that Binance US is already regulated by 43 states, 44 if you count our recent conditional approval in Hawaii. And we're on our way to having all 50 states licenses, which means we get examined by state regulators, much the way banks do. We participate in money services registration with the Treasury Department. So there's a regime today that we have to comply with. And in the future, we may acquire a trust company for custody businesses. We may acquire a broker dealer once the SEC allows such things for crypto assets. There are a lot of other things we'll do. But at the end of the day, in the same way banks have to adapt, we need to comply with what our democratically elected representatives say we have to comply with. That's what it is to operate in a market democracy.
Okay, well, part of that compliance also deals with the anonymity and some of the issues that have been raised about the anonymity of people who transact in Bitcoin. Are you set up in a way where if there were greater scrutiny on that side of the business, know your customer type of rules that specifically applied to Binance US and other crypto exchanges, are you capable of actually following through on that?
Oh, for sure. I mean, look, one of the things we're going to be on the front foot on, Romaine, is building crypto native technologies to comply with those kinds of rules. So just as an example, the idea that what we ought to be doing is treating crypto transfers like they're wire transfers so that we can say, oh, that's Romaine sending Brian $100, which is what happens in a wire transfer. That's probably not an appropriate way of approaching crypto regulation. But what can happen in a blockchain native world is we can know that Romain is sending money to an internet address that is a good internet address, not a criminal internet address. And there are attestation models being built by a number of fintechs around the country right now that will achieve that very thing. So nobody should care that you're sending me money. They shouldn't be able to dox you for sending money to some unpopular person, but they should be able to have confidence that you're not money laundering, that you're not financing a terrorist regime or whatever. And that can be done in a way that doesn't require people's names and addresses to be identified. So I think that's a critical value add that we'll bring in the next year.
Okay, well, I mean, just to play devil's advocate here too, as well. I mean, the government also would look at this not only from a money laundering or criminal activity standpoint specifically, they would also look at it, I guess, from a disclosure, financial disclosure, taxation perspective. They want to know that Romain received $100 from Brian, so that they can take their cut out of it. So I guess my question then goes back to this idea here that if the government does decide, at least the U.S. government does decide that it wants to maybe move a little bit closer to doing that in the same way that they do now with certain bank transactions here, does the business model of Binance US stand up to that?
Yeah, I mean, look, it'll stand up in a lot of ways, in part, Romain, because we will not always have an exchange fee based model. We'll have a lot of other products and services we bring to bear that don't even get affected by those things. But at the same time, I have to say, we as a country need to have an open dialogue about what the appropriate level of government surveillance and government control in our lives are. So I think you've correctly articulated one point of view, which is that the government wants to know every dollar that gets spent and on what. I would ask people who are watching this program to just say, what things have you bought in the last year that you'd prefer that the government not necessarily know about? And you probably paid cash for those things, right? Do we want to have a full surveillance society or not? That's just a political debate that we need to have when we think about what our values are. My personal belief is there is an appropriate level of financial privacy, which isn't zero. And I'm good with a world that says, hey, Brian, as long as you're not violating the law, you do you. I think that's kind of the ethos of crypto. And I hope that'll be where we come out as a country.
And I have to ask you about the news that was reported a little bit earlier this month about the Justice Department and the IRS looking into certain things surrounding Binance and the platform there. Is there any update that you can give us on what's going on with that investigation?
Yeah, look, I mean, I think some of these things are well known and have been for a while. There was the now debunked story from last October about a supposed plan for Binance US to funnel US customers to Binance.com to purchase investment products that are not allowed in the US. There's not any truth to that, and believe me, I wouldn't have joined this company if my due diligence didn't make me very comfortable with that. But it's not surprising, given that level of publicity, that federal agencies are going to ask questions about that, and we're happy to cooperate in all of those things. There are issues that they're looking at us and others, and I think people sometimes report on us because Binance.com is such a huge company and so far and away the biggest exchange in the world. But I can tell you, Binance US was established to comply with US laws. That was the whole point. It was not to evade US laws, but to provide services to US people on a legal basis. And under my leadership, that's what we're going to do.
What's the general corporate relationship right now between Binance US and Binance based over there in China?
Yeah, I mean, it's a truly arm's length relationship. I mean, we have some licensing agreements that allow us to license their brand and to license certain of their technologies. But more and more of that technology is being insourced on the U.S. And over the next 6 months, virtually all technology will be independently managed. So we really won't even need a lot of those licenses anymore. But Binance US was bootstrapped by a very famous crypto visionary who said, "Hey, I can't serve the U.S. platform on this, or on the market on this platform. I need a U.S. established, managed, and owned platform over there." And that's what I'm here to lead. So obviously, the brand is very valuable. The product licensing is very valuable, but that's a very different thing from them owning us, which they don't.
All right, we only have a couple minutes left, and I want to kind of circle back here to some of the price action in Bitcoin and some of the other crypto assets. And the idea here that over the past year, the investor base for cryptocurrency has not only broadened, but it's brought in a whole new group of people, institutions, and I guess apologies to previous investors, but people who would be considered to be a little bit more legitimate in a lot of respects. We've heard from a lot of those people on the Bloomberg network this morning, basically saying that today's sell-off is kind of needed. There's a little bit of a correction needed, but the longer term thesis about the use case for Bitcoin, or the speculative aspect of Bitcoin, or the store of value aspect of Bitcoin, that still remains intact here. When you look at your own customer base here, is it still primarily individual retail type traders? Or are you hearing more interest from institutions about how they can transact in this world?
Yeah, I mean, the answer is actually both. I mean, our institutional business is exploding at the moment. And in fact, the number of corporate CEOs that are calling me asking to build their own corporate tokens for loyalty purposes and all kinds of other corporate finance purposes is really amazing. So that's going to be what the future is. But our retail investor base is growing 10 or 15% a month at this point. As I say, we traded $3.3 billion on Binance US yesterday. These are enormous numbers, and that's coming just from organic retail customer growth. So we're pretty proud of that.
Any plans to go public?
Well, look, we're going to diversify our cap table this year. There's a lot of venture investor interest in this company, and I think that there will be at some point an IPO in our future. Coinbase provides a great pathway for that. But in the meantime, there's a lot of interest from U.S. investors wanting to own a piece of this company, and we'll be having announcements on that in the coming weeks.